Okay, let's jump right in. We're about to unpack a topic that honestly feels like it's straight out of science fiction, but the analysis report we're looking at today makes it very, very real. We're talking about urban air mobility, UAM. And specifically, we're doing a deep dive into one company at the center of it all, ACHR Aviation, ticker ACHR. And the big question here, the whole thesis driving the analysis, is this. Is ACHR really the next Tesla?
Right.
I mean, are they positioned to completely disrupt urban transport, an industry that's been, stuck for decades? Our mission for this deep dive is to get right to the heart of that question. We're going to pull out the key insights from this analysis, focusing on their manufacturing edge, their financial position, and crucially, the catalysts set for 2026. So by the end of this, you're going to have a really clear picture of the roadmap for this air taxi revolution.
And to get that picture, you have to start with the scale. I mean, the analysis really grounds you right away by citing Morgan Stanley's estimate for the market.
What are we talking about?
Yeah. The total addressable market, or TAM for UAM, is projected to hit $1 trillion by 2040.
Wow. $1 trillion. That number changes everything.
It absolutely does. This isn't some, niche market for scenic flights. It's a fundamental shift in infrastructure. And the analysis brings up this great concept, the Tesla moment.
What do they mean by that?
It's not about selling millions of units right away. It's that inflection point where the public, and just as importantly, the big institutional investors, stop seeing it as a sci-fi dream and start realizing, okay, this is inevitable.
So let's talk about the roadmap then. This is where the analysis makes that direct side-by-side comparison between Tesla's journey and ACHR's playbook.
Yeah.
And it frames it so well. They're not just selling a new vehicle. They're trying to disrupt the traffic jam itself.
Yeah, we've all been there, right? Staring at brake lights, just stuck.
Yeah.
The analysis really hinges on that simple, powerful idea, like, kill the traffic jam.
Tesla broke the monopoly of the internal combustion engine. ACHR is, it's aiming to break the monopoly of the road. And the way they're doing it looks almost identical to the original Tesla master plan.
It really does.
Tesla started with the Roadster high-end, low volume. Then they moved to the Model S and 3. And the final goal was always the autonomous robo-taxis. ACHR is following that same playbook, step by step.
Exactly. They're starting with these high-utility airport shuttles. The report cites that United Airlines partnership as Phase 1. It's a predictable, constrained route, perfect for proving the tech and the safety case.
And then, once that's proven, they can expand out to a full urban air taxi network across the city.
Right. And then only after years of data and regulatory approvals, they get to the final stage, autonomous flight. It's a very careful, methodical approach.
But this brings up a really critical distinction, doesn't it? But regulatory world is completely different.
Oh, massively different. You have to remember, Tesla deals with the NHTSA for cars. ACHR has to answer to the FAA, the Federal Aviation Administration.
Which is a whole other level of scrutiny.
It's exponentially more complex, slower, and safety-obsessed, as it should be.
So while Tesla used early sales to fund R&D for the next car,
ACHR is using its initial routes to fund something even more important, operational data. They're gathering thousands of hours of flight data, pilot performance metrics, maintenance logs. That data is the currency the FAA accepts. So they're not just buying time with that money, they're literally buying compliance.
That is a fantastic insight, buying compliance. Okay, so a plane has to be built regardless of the hurdles. And this is where the analysis points to what it calls ACHR's manufacturing moat. It's not just about the design.
No, and this is what separates ACHR from 99% of the other eVTOL players out there. Most of them are still thinking like old school aerospace companies, low volume, high precision, incredibly expensive.
Building a few hundred planes a year, maybe.
Right, if not the thousands you'd need.
But ACHR's going in the opposite direction. They're building this massive high volume factory in Georgia. And the analysis places enormous importance on their partner in this.
Yes, the automotive giant, Stellantis.
Right.
That partnership is, it's the secret sauce. So many eVTOL startups die in what's called the Valley of Death between a working prototype and actual mass production.
It's a huge capital drain.
A total capital sink. Stellantis brings that automotive efficiency. They know how to do high-volume stamping, assembly line automation, supply chain management at a massive scale.
So they're bringing car-making efficiency to aerospace.
In a nutshell, yes. It helps ACHR drive down the cost per aircraft and just drastically speeds up the whole process. This partnership provides industrial validation. It tells investors, hey, we can actually build these things at the scale needed to tackle that trillion-dollar market. It's a huge de-risking factor.
Okay, that covers the long-term vision. But let's get to the now. The report has this whole section titled, Why Endeo? It's all about the concrete catalysts coming up in 2026. This isn't some far-off dream. It's happening in the next, 12 to 18 months.
And there are 3 huge ones.
Let's start with the U.S. The analysis points to this major validation from the White House in December 2025. an executive order to start moving toward air taxi trials in U.S. cities.
That's enormous. It's government backing that provides political momentum. It reframes this from a risky venture to a piece of national infrastructure.
It cuts through a lot of red tape.
A lot of red tape.
Okay, so that's the U.S. But at the same time, ACHR is moving even faster internationally. The report highlights that their Midnight aircraft already finished its flight test campaigns in the UAE back in November of 2025.
And that's a very smart dual-track strategy. The regulatory pathway in the UAE is often much faster for new tech than the US FAA.
So they can get operational sooner.
Much sooner. They can start generating revenue, and maybe more importantly, they gather that real-world operational data that the FAA wants to see. It's a huge head start.
And the timeline there is immediate. Commercial flights are set to begin in the UAE in 2026. That is execution.
It is. And that execution is already being backed by serious sales momentum. You've got the joint venture in Japan, Soracle, announcing they intend to buy up to $500 million worth of aircraft.
$500 million.
Okay.
So how does that order book connect back to the 2026 plan?
It connects all the dots. You've got U.S. validation creating political tailwinds. You've got the UAE launch providing immediate revenue and data. And then you have Japan validating global demand with a massive order. It synthesizes into a very real, very concrete short-term roadmap.
Okay, let's turn to the money, the financial side of this. The analysis talks about ACHR's financial fortress, and it was written right after the stock took a small dip, about 2.95%, closing at $7.89. The report actually frames that dip as a buying opportunity, a discount. And the reason why comes down to their balance sheet.
Absolutely. According to the report, ACHR is sitting on about $1.64 billion in cash.
And in this industry, that's everything.
It's life or death. The eVTOL space is just brutal on capital. Most startups, the analysis argues, will simply burn through all their cash long before they get certified or reach production scale.
So that $1.64 billion is their survival kit.
It's their survival and their thrive kit. It means they can execute their 2026 plan without having to run back to the market for more money every few months and dilute shareholders. They have the runway to focus on the engineering and the regulation. It lowers their risk profile dramatically compared to the competition.
And for those of you who follow the markets closely, the report also laid out some specific technical levels for the stock. It's a good way to gauge the current market sentiment.
Right, just for context. The report cites immediate support. That's the floor where buyers tend to step in at between $7.80 and $7.85. On the flip side, you have resistance points where selling pressure might appear at $8.15 and then $8.50.
And what about the bigger picture, the breakout levels?
The report flags $10 as the first big one. That's a psychological level where more institutional and algorithmic trading kicks in. But a sustained push past $12, which the report sees as a near-term analyst target, would really confirm that the market is fully buying into their 2026 execution story.
All right, let's bring this all together for you. A quick synthesis of the bullish case from this analysis. We've covered three main pillars. First, the incredible scale of this potential $1 trillion market. This isn't a small play.
Not at all.
Second, that unique manufacturing moat they're building with Stellantis, which really de-risks the whole production nightmare. And third, those very real, very concrete 2026 milestones happening in the US and the UAE. So you should now have a really detailed understanding of the specific drivers behind this air taxi revolution and why ACHR is being compared so closely to an early-stage Tesla.
But we focused almost entirely on the aircraft, the money, and the flight regulations. And as we wrap up, it raises a final provocative thought that goes a bit beyond what the analysis covered. ACHR has the planes, or will. They have the White House's blessing. They have $1.64 billion in cash. But the next huge barrier for them and for the whole industry might not be building the planes. It's building the places to land them.
The physical infrastructure, vertiports.
Exactly. Can they secure the real estate in dense places like Manhattan or Tokyo? What about the not-in-my-backyard resistance from residents? How do you integrate all this into already crowded urban airspace? This becomes a fight over zoning laws and municipal politics, and that's the one hurdle that even $1.64 billion in cash can't just bulldoze through. That infrastructure battle is the next chapter.